Good day, ladies and gentlemen, and welcome to the show on this Friday, the 29th of October, 2021. Thank you for tuning in. I'm glad to have you guys here. Now, here's the thing I want to say is if we don't get this market crash, a lot of people have been talking about a market crash. If we don't get it by March, then it's going to be inflation all the way, guys. And it's starting to look now like that's the way it's going to go. Inflation, and they're trying to hide the inflation. They still want to put in their spending packages. So let's take a look here at what Janet Yellen has to say. Treasury Secretary Yellen says spending bills will be anti-inflationary, lowering important costs. Treasury Secretary Janet Yellen told CNBC on Friday that the administration's infrastructure spending proposal will lower inflation at a time when it is increasingly rapidly increasing. See, they're thinking that these spending proposals, and it goes down here to list the spending proposals, just exactly how much. Now, she's over there in Rome right now where she's attending the G20 conference of global leaders. Of course, they're all having a good time over there, clicking their wine glasses together, and everything at their success and making all of us poor. But anyway, she's over there right now, and look, a $1 trillion infrastructure and a companion $1.8 trillion climate and social spending plan, and they actually have the audacity to say that that's going to lower inflation. Says Secretary Janet Yellen on Friday, says that the infrastructure spending proposal will lower inflation. Now, I just don't get it. If you're going to spend $1.8 trillion and another $1 trillion, that's $2.8 trillion, almost $3 trillion. How's that going to lower inflation? And it's going to definitely going to increase demand on everything. I mean, if they're out there building the road and stuff, they're going to put demand on gravel and everything else that they use and trucks and everything. How's that going to lower inflation? A lot of talk, but let's take a look at the markets right now in more depth. Let's take a look at the silver price today. What we're seeing is $23.82 today for silver. And it's 23 cents down. I just don't get this either. It's a gold and silver price, but I'm thinking that there's a big mountain that they got to climb. Whereas you take something like cryptocurrencies right now that's already climbed up the mountain. Basically, gold and silver are down at the bottom of the mountain that they have to climb. And why I say have to climb is everything else is going up in price. Gold and silver have been suffering all year, down lower and lower as inflation is raising the price of costs. It's going to raise the price of costs for miners to get the stuff out of the ground. Everything the miners buy, there's an energy crisis going on. It's a very energy consuming industry to try to get gold and silver out of the ground, but yet the price is still staying low. So silver's down 23 cents today. Let's take a look here at the gold price. The gold price is down $21 today at $17.78. What this is creating right now is a superb buying opportunity. Let's take a look at cryptos. Now, cryptos are still up. It's at 2603 billions. That's a $2.6 trillion industry. I'm going to tell you guys what about cryptos. In my personal opinion, I think cryptos are getting too big to fail now. They're starting to get into that category at $2.6 trillion industry. And what that basically means is the powers that be, if they don't want to if they try to bring this down, completely smash it down to the ground now at this point, they'd bring down the entire financial system. Because once it gets too big to fail, is bigger than Evergrande. And oh, by the way, guys, about Evergrande, they're making their bond payments. They're making their late payments and everything. They've made the second payment now. So don't hold your breath waiting for Evergrande to fail now at this point. And if they don't fail, we might not see this market collapse in the Chinese real estate market. We might not see it. And at this point, I'd say don't hold your breath waiting for that. So that's good, actually, guys. That's a good thing. Let's take a look at the Bitcoin price today. We're looking at 60,926. Let's move on now and take a look at the Dow Jones Industrial Average, which is down 59 points on the day so far. And it's dropping right now. It's dropping really fast. Let me refresh the page because it's dropping so fast. Yeah, it's down 107 now. It's been dropping right now pretty fast. Let's take a look now at crude oil. Crude oil's down 79 cents. It's sitting at 82.02, and it's down almost 1% today so far. Now we're going to take a look at the MOVE Index, and the MOVE Index has been climbing lately. It's up to 71.96. It's starting to get up into that zone. Once it crosses 80, it's starting to get into the zone where the credit markets start to become a little bit unstable once the MOVE Index crosses 80. So 71.96. You have to realize we were at 60 or even 59 there just a couple weeks ago. Now it's at 71.96. That's quite a large jump. Bonds and rates today. We're looking at the yields rising, but not significantly. The U.S. 10 years at 1.6. It's where it's been. The bond market's actually been quite stable over the last few months. The U.S. 10-year has been hovering between 1.5 and 1.75 over the last couple months, and it's at 1.6 right in the middle of that range today. And the U.S. 30-year is at 1.98, and it's up 2.4 basis points today. So we got fairly stable bond market. And let's take a look now at the U.S. dollar index. And the dollar's rising today. And as you can see, it's at 93.75. So we got a rising dollar. There's a thing where we're entering into the first side of this inflation. We've seen the first wave of inflation now. And I predicted that more than a year out. Now what I'm predicting for you guys is the second wave of inflation that's coming. In the first quarter of this year. It's probably going to get started, And this is a lead-in period, guys. This is a lead-in to something much bigger. Ultimately, it ends in hyperinflation. There's no place else for them to go now at this point. If you guys ever went out and driving out someplace in the city or something, and you come along a dead-end road. You're driving down that dead-end road. You cannot, at that point, unless you turn the car around and go back the other way, there's no way you're going to go anywhere down that dead-end road. And that's what we're doing now with the Fed and everything. They're going down a dead-end road, and it leads to hyperinflation or a complete and utter collapse of the system. They cannot afford that complete and utter collapse of the system, so they have to keep printing. And if they keep printing, it's going to end in hyperinflation. There's no way out of this situation. Math dictates that this is going to happen. It's not just me on here saying, hey, this is going to happen. Math dictates that this has to happen. That's why I was able to see this way out in the past, like years ago. But it's just that what I couldn't predict is that it was going to take this long. It's been a very slow, drawn-out process, but you have to understand, in the final stages of this process, it goes much faster. It's very much like a snowball effect. As the snowball starts to gather speed, it goes faster and faster toward the end. And this is called an exponential function. And that's what we're heading into, the front side of an exponential function. So that leads in hyperinflation. So this is the time right now where you guys got to protect your wealth, and gold and silver are insurance. Now you can possibly make some money with cryptos, But gold and silver, all they really are is insurance. In case the system goes belly up and everything goes crazy, you can still hang on to your gold and silver and you'll still have something in a hyperinflation. Thank you guys for listening. We'll catch you guys in the next show. Bye-bye.